Welcome back to another live trading session, traders. I hope that you had an enjoyable trading day and it's a weekend. We are progressing towards pretty busy week now, and this is the last day of the trading week. Throughout the week on gold as well as on euro dollar and DXY, you have seen significant movement. At the moment, we are looking at some trading opportunity this week, looking at some significant trade analysis. And here is what we are looking at this market for a potential entry. If you look at the bigger picture perspective here in this market, this is an inverted head and shoulder potentially forming on the daily. So if you traders looked at yesterday's session, we had quite a few significant trade today as well, looking at some significant entry here in this market. So let's begin another trading day as of Friday, and looking for an entry from a key support level or resistance line. The first step, in the first few minutes, we will be looking at in-depth analysis, but I would like to see that all members are here. So how's your day, and let us know what's your bias today on gold. What's your bias on XAUUSD or gold? And then we will be looking for the next move here. Now, daily move is significant. Here's the daily support. And with this daily price action, the market is having a reaction of this daily 10 exponential moving averages. Guys, this is a long-term uptrending market. Looking at thank you. We will be looking at dollar yen also. This is also trending market. Dollar yen, if you look at, this is an uptrending market, and I think dropping down to the daily support can be an important support that we can look for entry for short-term bullish. If you're on a sell, there might be some deeper pullback, but I would always prefer to trade in the major trend, because currently the dollar yen is in an uptrend, but there might be, as I mentioned, some potential pullback because it's on Friday, right? Friday is more often a reversal day. Do you agree with that? Going back to gold again. Now, gold also just tested the weekly resistance line. This is the weekly resistance, and of this weekly resistance, market has just rejected back below, and there is a higher chance for a deeper pullback here now, because this market, if you look at this market, is already has bounced off this weekly low. If we draw the both level, the weekly low and the weekly high, and both of them are quite significant. All right, so as the market already tested this weekly resistance line, which is a very important key level, they're expecting this market now to potentially to either retest, continue, or to drop down here, right? Which one is going to do that? What's your thought on that? Do you think that gonna continue to rise, or you could see that the market to break below here? There is a potential for a reversal because the market has just tested the weekly high. We have dropped down to very lower time frame here now on the 15-minute perspective. And with this trend line that you can see, the market is, this is a key support level that you can see. And off that support, the market is showing its pattern back to the upside here of this support level, breakout, pull back to the trend line, breakout, pull back to the trend line, breakout, pull back to the trend line, and could see that entirely a drop, a breakup structure down to the support level. Therefore, looking at any kind of reversal entry, our goal here is to learn trade and to trade. So we are looking at best entry possible. And I think that if this market break down today, do you think gold is going to break below? We might see that entirely coming to the daily support, or on the other hand, it still can continue to rise. So the market can move either up, down, or sideways. Which one do you think that the market is going to do here? This is what we are looking at, this market to show up, which way it is going to be heading. And currently we have drawn the trend line. We want to see that the market is showing enough confirmation for break of this trend line, and we will be looking for sell as soon as the market shows that pattern. Change some music here. We can see some bearish engulfer is being formed here. And I might look for an entry if we see that there is a higher chance for this market to reverse. Okay, this is 5 minutes bearish engulfer that you can see here being formed. And with a tight stop loss, with proper risk management, I will be opening sell of this candlestick pattern from this 5 minutes bearish engulf, only 68 pip stop loss. We'll be targeting to this support level if the market shows that downward momentum. Guys, key here is the risk management. All right, so looking at sell, but we, of course, it's fully risk managed. I have opened sell here now, and I will be explaining later. This is the first trade today. I have late entry. I haven't opened any position yet. This is the first entry that I have opened on gold, and you would like to see that the market is showing up. All right, so I'm on sell at entry. Update the curve. It's coming down. All right. Let me know if you're running this with me. Here I have open sell position and looking for the market to show its trend back below. Cool. We're up 30 pip. Like to see around 75 pip. Breaking below can give 75 pip. And 50 minutes candle closing here. So this is forming a bearish engulfer, and I am on the trade, sell trade running in. This is the 1 hour price action now on a pullback, but I think if successfully drop that market back below, we could see that the market to show its moment. Welcome, welcome. Welcome. Here's looking to see the market to fill up. There is a short-term entry. Hey, when did you go, Booker? Yes, of course. Of course. Why not? Okay, here we are looking at this level, looking for that sell entry. You guys can find link below this video in the description if anyone want to sign up. Also, there is a deposit bonus available depending on your geography. So using that link, you can also have that bonus offer. I don't know why my OBS is getting just connected and disconnected. Come on. What happening? Why there is a pullback again, back up. Okay, the candle close. 15 minutes candle closed. So I was expecting little stronger bearish move. There is a bearish doji. Was expecting a little bigger body here. Now this trade, look at to see if we will be running. There is a chance for now rejection here. Welcome. Okay, it's breaking below now. Here we are now at entry. At entry, just coming into the profit area. Looking at the 15 minutes, we'll be looking to see if we will be running or we will be exiting at entry. Still running in. Okay, there is a rejection, so I'm holding on. Because as long as the market is showing a stronger bearish move, we are holding on to that, because there is a, if the market continue to drop here, there is a higher chance for a bigger drop here, right? So we are on it, right? Running little profit, but we would like to see that the market is showing stronger bearish momentum here. All right, cool. The market is breaking below, that you can see. Thank you. The 5 minutes price action is showing that there is a bearish engulfer. Cool. Okay, we are up on it, and that's why you can see the market is significantly bearish. We can see that there is 65 pip move happen, and I'm going out, guys. This is a good move for me at the moment. We'll be re-entering again. Because it's a uptrend, the market has dropped well below here. All right, so we might see entire drop. But because this is a, if you look at, this is a long-term bull market, so there might be another pullback. So we've been able to get that nearly to 71 pip. There might be a little less more, but I'm not obsessing with how many pip I have gone. But plus 71 pip, that's the key here. All right, got it. Out with the trade. Now, looking for the next one, waiting for the high probability setup. Now I'll be able to explaining what is the education or the logic or the strategy behind the trade. That's why the key, guys. Understanding the logic and education behind the trade is the key. There's a break entirely. So it has entirely broken off that level that you can see. The market has entirely reacted back below here, and therefore we can see the market is maintaining its downtrend here. So if you look at from this key level, has broken down here and then created a narrow doji, and the market again started to break below. So this is if you look at that, this market now in this downtrend and could continue to drop down further back below to this long-term support level. And this is what we are looking at this market here from the bigger picture perspective, looking that the market to continue to drop. And if you look at the weekly, if you look at in the beginning of this session, this is what I was discussing, that the market has tested the weekly high, right, which is high area of value. Because the market tested the weekly high, the high area of value, there is a higher chance that this market to continue to trend back down here to this support level to create a new lower low. Ready to take your trading to the next level? And also I'd like to see a feedback here. How many of you have taken this trade? If you have taken this trade or you have seen that the trade was taken, make sure you like this stream. And also don't forget to subscribe to the channel. Nice one. Welcome. Trending and maintaining its downtrend here. Some free mentorship, Malaysia, thank you. We do take some members more often from the Telegram, free Telegram to the mentorship. You can join the free Telegram whenever it's open. You can join. Sometime we do take the free in the mentorship to to help we trade together. I'm trading here for many years. We have very established and long-standing community that you guys have seen that I'm trading for a very long time. And you have a member from years here in the academy. If you guys can join the Telegram link. So to stay ahead, make sure you keep yourself in this progressive trend. Learn trade and also trade based on strategy. Okay, so here is the market. If you look at the lower time frame, the trend is still on here, and in the downtrend, looking at potential trading opportunity, and it's maintaining the down. And I think this market may come back below to the daily support here, because there is, if you look at the weekly market, the price has just tested the weekly liquidity zone. There is a higher chance for deeper pullback here in that market. And here is that what I'm looking to see the price action is that there is a head and shoulder, and with that head and shoulder we can see the market to break below from that head and shoulder and then continue to drop back down. I'm looking at here in this market, release time frame are you using? What time frame you are using? Okay, so look, I look at the multiple time frame, but we trade on comparatively lower time frames, such as on 5 minutes, 15 minutes, and 1 minute. All right, so the analysis is based on the multiple time frame, but we enter on a lower time frame. So if you use the proper timing, proper support and resistance, you can trade on lower time frame. But if you are trading on lower time frame, the most important part here is to use the higher time frame as your supply and demand area. There is a misconception that if you trade only on lower time frame, then you're not gonna be successful, guys. Keep in mind that, because lower time frame is reliable only when you use it in conjunction with the higher time frame, right? So if you use the higher time frame key level as your confluence, for example, with this trade that just we have closed, what is our confluence, right? So they're saying that if you look at, have you ever seen that rice being cooked? So if you look at one rice, you can see that all rice cooked. If you eat bread, then in terms of bread in the same. So this green zone that I have drawn here, okay, probably guys have seen that there is it was forming in the past quite a few times. It grabbed liquidity. This is what I say, that a liquidity tree has been formed, right? You can see that it's a kind of tree that branching around, and then the market after multiple times rooted down, grabbed the liquidity like drinking, and then just bounce back to the upside, right? So which is branching of that liquidity. Now what happened the market later? This is where the market has reached that weekly resistance line. There is a high area of value, and that weekly resistance line, which is an important area of value. Thank you. Okay, so if you look at that, the market reach to that level, this is the weekly resistance. Though we have entered the trade on a lower time frame, we use the 15 minutes price action confirmation for an entry, but what we have done cannot be undone. Keep in mind that. Time and tied it for now. So therefore, Okay, now this is the weekly liquidity zone, right? And with this weekly liquidity zone, which is a high area of value, and looking at high area of value is where you can find the best trade setup. And with this high liquidity zone, the market triggered that liquidity and then immediately got rejected of this key level and dropped that back down, have done the pullback. Now when this 15-minute candle is forming, which is a bearish engulfer with a stronger liquidity sweep, we have looked at that entry on this breakdown because the market already fueled off that weekly zone, as liquidity is the fuel of the market. Therefore, it has recharged off that level. There is a higher chance for the market to drop from that zone, and we have seen that has done, right? Simple. Now we are having, in just a matter of an hour, we are looking at coming up some significant news. Gold deep as US dollar takes up, all eye on inflation data. Yeah, that's true, inflation data, and it's what we're looking to see. Gold price edged lower on Friday as the dollar firmed to near 1 month's high, while investor awaited key inflation report due to later this day for more cues on US monetary policy trajectory. Spot gold dipped 2.1% to, okay, so there might be some changes coming, and these are fractional data, you know, like it's not an indicator of total market movement, but we can see the short-term spike in the market with this data. The market is entirely moved by the overall monetary policy of any reserve bank, okay? And there is also, traders keep in mind that there is, if you really want to understand the market, truly want to become a trader, then you need to understand the total mechanics. Everything is one, right? If you look at the whole entire universe is one single layer. The currency also like that. If one reserve bank hike the rate, it in fact influences all other currencies. They are interrelated. There must be, more or less, there is always. You see that when there is a global economic crisis, it doesn't happen in one country. You need to, this is where there is no segregation or separation, or this we are rich, there nothing happen. It entirely affect everywhere. So if you look at the 2008, okay, the global crisis, when one currency or one economy goes to depression, and followed by next one, because they all are interrelated. So therefore, looking at the monetary policy is where the market in fact move, right? So usually there are misconceptions, right? If a currency continue to drop, doesn't mean that this economy is getting weaker. If a currency goes up, doesn't mean that the economy is getting stronger, because there is always a balance between export and import. Depending on what's your strength will determine your monetary policy, right? So if you look at JPY, for many years, there's a policy that, recently it goes to, even there was a negative currency policy. And JPY is considered as safe haven, but it was continuously bearish. But it was safe haven for investor. So JPY, CHF, dollar and gold, these are the currencies that are safe haven. So it depends on many factors that sometimes very difficult. It's complex factors of understanding that it. Therefore, as a trader, what we need to look at is what is coming next, and then trading based on that. All right, so now let's go back to the XAUUSD, right? So looking at, again, we see that the market has dropped to that level, dropped to that support. Okay, here is the previous resistance and support, and off this resistance and support, the market is slowly now building its momentum again, and I think there is a higher chance that this market is going to hit that key level. Sorry, you could say. I think the price is representing, I think the price is respecting the trend line. Okay. This trend line that you are talking about. Okay. So this is the trend line. It doesn't look to me very much of, because it's already broken that trend line, right? So you can see the market is already below that trend line. So here I was just doing a quick Google search. So what do you see that? So you need to understand as a trader, this is really good. Peak recession numbers at the highest of the crisis in early 2009, 59 out of 71 countries were in simultaneous recession. So that means if one country goes to depression, that means recession, it directly affects all other currencies and countries. All right? So there is nothing local, everything is global. So because they all are connected. All right. Now, okay, so we traded that one. Now looking at now from this zone, either the market is going to go ahead again to the weekly resistance or coming down further back below. Welcome, welcome. Is still in the trade? No, I've got out 71 pip. How many pip you have gained that one on XAUUSD? Have you got that trade? We had one earlier. Now looking for more entry later today. Okay, looking at here on the lower time frame, that the market of this support breaking back to the upside here in that market. So looking at this support level, we are looking at now, if you look at from this support, it's now again pushing back to the upside. Now this push back could be that the market is going to retest the weekly resistance again. Here is the resistance line. The market slowly breaking that low, and we could see the market eventually here. We might see that trend continuation back below in that area, and we could see the price to drop further lower back below to the support level. Okay, so what we now, if this is now established downtrend from this weekly resistance, we could see the price to eventually fall down well below to this daily support level. All right, so there is a daily 10 exponential moving averages, and there is also the chance that the market to even drop lower further. It's just about moving averages you are using. Okay. The moving averages. Also, we discussed about the ADX. Yesterday, I have posted shorts. You guys looked at. The moving averages is. How many of you want to know the secret of this moving averages? Me? Okay. Anyone else? Okay. How to do the advanced trading? This moving averages also help me to find out trade based on this trade engine, right? If you look at, this is what we have opened. See that? The trade engine. This is trade engine version 2. If you are premium, then you may have access, because I can give you here, but the only thing that you need to know also the education. There is a one simple lesson behind this engine. So this is a a Python script available for TradingView. It will directly generate signal for you with entry, stop loss, and take profit. And also you can set an alarm for this, because whenever the trade will appear, if you set alarm, it's gonna send you alert to your mobile phone or email. You can use it on higher time frame if you are manually trading, because I have also MT4, MT5 or other platforms, C-Trader, everywhere. All right, the automated version. And also you can also currently in the process of automating on TradingView as well. So it's a fully risk managed setup. Key here is the risk management, right? You can trade manually in the higher time frame using this one, because on the lower time frame, if it shows a trade for you that I have opened this 5 minutes trade just now, and you have secured profit, for you it might take, because I'm experienced, I can know that which trade not to take on the lower time frame, such as this one. Better to use on a higher time frame if you are using manual trading. Higher means that above 30 minutes or 1 hour, and it can be traded in any instrument, currency, cryptocurrency, gold, anywhere. Just get access to that, a free account on TradingView, and you can get access to that. You can look at on the 1 hour chart in, for example, even BTC/USD. We keep that open. It's gonna show head trade here. So it's high risk reward ratio trade. You need to use high risk reward. For example, this one, okay, use 5 times, 3 times, 4 times, as many as you can, so that it gives you always in the edge. Okay, the market is now started to drop. Now the strategy is also on the course tab on your website student dashboard. If you are joining here, then you can access the courses on the website, log into the website, and then gain access to everything that you need. Complete course for becoming successful as a trader. Now here is the market. We can see that it's building that momentum and start to drop down here, back below to the support level. Off this level, the market is breaking that low, and we can see the price from this resistance line slowly coming down here. It's called what? This is an indicator. Trade engine. Trade entry engine. So for an entry, you can look at that. So it's for entering the trade. It's called the trade entry engine. Now what we can see of this level, this is the 5 minutes price action. You are welcome. So the market is trending, that you can see, and it's maintaining that downtrend, and we can see the price is maintaining the downtrend and continuing to the to continuing to drop back below, and we could see the price, what I think that breaking down further. Here is what we are looking at this market to trend back down to this support level. And if the market is maintaining that movement, if we see that there is a false breakout again here in that area, we are looking for another drop down back below. We are looking at now here for the market to go ahead, if you look at, and then to retest and then reject back again here in that area. Now, if the market goes here and create another false breakout, that's where we will be entering into another trade in that market. Now for the I think there is a very high chance for the price to trend here back further below. There is a weaker response from the buyers that you can see. See the smaller candle is being formed. The smaller candles represents that there is a weaker, because if you look at the market, right? If you look at the market doesn't, you can't find any reliable information other than the candlestick pattern. This is also paradoxical. You'll see that we looked at many things, believe in many things, but we entirely ignore what we see in front of us. Every aspect, you'll see that. In the chart, if you look at, the only thing that you can rely in this entire chart is just green and red candles. And this is visible information. And it's a tested, reliable information. Everything else that you can see, including news, on TV, social media, everywhere, subjected to question. But this one, it's a reliable, because in such a global market, it cannot be moved the other way around, because it's $1 trillion market. If someone wants to create a fake candle, cannot be without investing in it. So therefore, the candlestick pattern that you can see, there are only the information that you can take for an entry or analyzing the chart. No matter what happened, what the chart says is where we need to pay attention for an entry in the market. So what is this chart is saying? The market here is in a downtrend at the moment for the short term. Therefore, no matter whatever we can see outside, we need to focus here for selling. That's what we have done. And if you look at the trade entry engine, is based on entirely based on the price action. This is a price action setup, right? It's a trade entry engine based on the price action, market structure, and liquidity. If you want to know the secret of the universe, then think in terms of energy, frequency, and vibration, right? Go to the smallest length, which is the Planck length, right? It's not a story, it's real, right? If you go to the Planck length to the smallest scale possible, then you will find everything just nothing, right? Wave, energy, and frequency. The market has only 3 components that you can look at. The market structure, which will give you the backbone of the market, the directional bias in the market. And then the smart money, that means invisible liquidity, where the order is. which is driving force for the market to drop in one direction. And the price action is where the candlestick pattern support and resistance will give you a directional bias, will give you the entry confirmation, and that's all you need. All right, now it's crossing that threshold that we have placed our previous take profit target, and if the market shows that further confluence, then you will be looking at selling again here in the market. Okay, we can see that after retesting this support, it's breaking back to the upside. This might be a rejection or a pullback, depending on how the market is now showing up here. Here's the support level. The market is entirely breaking back to the upside here in that market. Okay, now silence time finish. Now start to look at again for further entry. Here's the support. We might see the market to, but I think now to penetrate above and then could potentially come down further back below here. And there is a chance for the market to eventually cross that high and then to what I think that return back below. Okay, so we are progressing towards the session here, and advanced GDP coming on dollar, and also core PC price index, so coming dollar, flash manufacturing PMI, which is also later, but these two news we will be covering here. Now it might be delaying, release date delayed by 22 days. It is the shutdown. Okay, just go and shut down. And annualized change in the inflation adjustable value. Okay, so these are some data that will be also having that influence in the market movement. So they will basically add up to the monetary policy report and all other. The policy adjustment will be based on those data. So coming in, and if we look at the core PC price index, focus 0.3%, and the actual is where it is heading to. Okay, so now as those data coming, the market will also react. Let's look at the DXY to see how the price action is creating the structure here, right? And DXY, if you look at that from here, it was unexpected move that I would say. You know, my prediction was that the market to break this high, probably from that level to drop, but we see there is a bounce back to the upside. Market can do that. Okay, you can be wrong at any point in time, that's completely fine. Now we can see the market has formed a double top, and are you going to see now a reaction back below here of this level? Do you think DXY is going to trend back down? Because it has just broken the previous swing high, right? So there is an imbalance here now. It's a fair value gap. Very high chance for the market to have a potential reversal in that direction. So for a higher time frame trader, this is a potential and a trade entry here. Okay, reversal for a bigger move, but I'm not entering. But I'm talking about this is a potential sell even if the market goes up, because this is a key resistance line, key supply area, and the market is now forming a double top, which is, in terms of probabilistic perspective, it is a sell zone here on DXY. because the market trend is down, and this is a break of swing high, so which is a break of structure. And when there is a break of structure, there is a chances for move, as there is a significant amount of liquidity above this level, which is triggered, form a double top. There's a higher chance for the market to drop. It might be even dropping over the weekend, could be. So if DXY is coming down, then gold is remaining its uptrend, and we see that there is a potential for an uptrend on gold. Okay, so you can see whenever the market is coming down, it's getting the rejection back above. All right, so looking at here on DXY again, just want to see that what is might be happening. DXY really created an interesting price action here in that area. Now, if DXY is coming bearish, we see that dollar yen has moved a lot, and now also creating reversal pattern here. Going back to our gold pricing, I switched time frame little more. If you guys looked at, have seen that. This is a habit that I have intentionally created, is because to see bigger picture. You can train that way if you want to. Time frame. If you look at, I'm replaying this chart here, guys. This gonna change the way you look at the market. You see that 15 minutes, there's another 15 minutes, 2 15 minutes bearish and gulf are almost identical, the move and both of this candlestick pattern. See that? Okay, one bullish move followed by one red bearish candle, exactly same, crossing that high, close back below. Again another one bullish move, and then followed by one bearish candle with crossing that high. Exactly the same, identical to 15 minutes candle. But this one is, if you look at after this candle close on the 50 minutes, if someone tell me to sell that we have sold, that I would say that it's almost 75% probability sell off this level. While if someone tell this one, for me it's a 30% probability sell candle. That much of difference. Why? Because once this red candle formed, the market trend is up and the price is just about to touch this weekly high. And the weekly high is so important because when the market opened with a gap over the weekend, past week, it didn't test that level. The market dropped well below from that. Look at here. And because the market reached that near to the weekly resistance, there was a very high chance the market will go back again to retest that weekly high. But in the second case, when this candle has formed, the market already triggered that liquidity. That means all those people who had a stop loss of the sell, they became a buyer, and the smart money sold here. The market has very high chance for a drop. So without looking at the higher time frame, it might be very difficult for you to understand that. You might be, but looking at higher time frame will give a clear direction of what happened in that area, and that is the weekly market structure. That's why when you look at the multiple time frame multiple times, will give you a better understanding of the market context that you can use for trading every day. Even if you are trading on lower time frame, even in the one, you see this is 15-minute chart and pretty lower time frame. Okay, so let's look at now on the 4 hour, do you think it looks like it might go up for 5042 again? On the 4 hour, do you think it might look like might go up to 5042 again? There is a very high chance for going to 5042, and even it may continue to trend throughout the, like today we might see sideways retesting again. Now how this at the moment for the next, that means later today, let's delete those lines again. We have secure the trade, looking at the fresh perspective, and then we will be discussing it. So this is the weekly resistance, right, where the market has tested. There is a very high chance the market will retest again that level. Looking at the weekly candlestick pattern, this is an important price action now. If the market doesn't drop back to this low again later today, or if the candle, this weekly candle, is not closing with a bigger red body, that means closing like that, narrow doji, very high chance that next week even the market open with a gap and could bounce back to the upside. It's a sign of stronger bullish confluence. However, if later today the market breaks down and it closes as a, let's say, a big red candle, full body red candle, then the market may drop further below here. Okay, these are the two conditions that we will be looking at. If you see that over the weekend like this, where now candle is a very narrow, which is less likely, but the higher chance, if it is closing as a very narrow red body, that's a very higher chance for the market to bounce back to the upside. And if the market closing back below here, the weekly close with like that red candle, there is a chance for further downside back below. Now, why this happen, or what's the logic behind from the technical and from the fundamental, both we will be looking at. Guys, when the investor will sell gold, the market will drop. When the investor will buy gold, the market will go up. And this factor depends on very much of geopolitics, also fundamental, right? Fundamental, there is a very uncertain factor in the market, which is the geopolitical. You can see that the technical is very much predictable. You can analyze the chart, you can look at the market, and you can see the trend line from years of time, and you can predict the market. The fundamental also very much predictable, because there is an announcement that there will be rate cut, and if there is a rate cut, then we might see gold is going to be bullish, most likely. So its rate cut is bullish for gold. So the technical and fundamental both are very much predictable, but very uncertain is the geopolitical, which is very unpredictable. And that's a variable in the market that you need to look at, because the more variable that you will be looking at, it's all about your edge in the market, right? Your edge in the constant edge is not much of in change. The variable edge is where the will make a big difference in your entry for a long term. So variable edge, always pay attention to the variable edge. Variable edge is difficult to predict, but if you have the clue or understanding of the context, you are very much up in a high edge of the entry. All right, so keep that in mind, where it will be really helpful as a trader in terms of the variable edge in the market. Can I look at USD JPY? Can we create a break below tonight? Okay, so for dollar yen, comparing with the DXY, With USD JPY, previous week there was a massive bearish engulfer. Now after this massive bearish engulfer, the market didn't show very much of downward price action here. If you look at the weekly candlestick, you can see that it has a very smaller wick at the bottom. That means as soon as the market went, the buyers took control in this market. So, and also from the monthly, not a very high probability also the bull market. It might start to range over, I think, on USD JPY. So there might be a range in this market. You can see already slowly moving, but it is still lower time frame getting a trend. If you look at the weekly DXY, you can see that DXY has managed to go back to the swing high here. And I think USD JPY also might do something like that. We might see the market to go up too high. This is a bullish market, that means an uptrending market, and I wouldn't consider still a possibility for entirely a break below on USD JPY. Okay. Now, if gold, let's say if gold goes up, then dollar should be coming down, right? But in a situation where the market is highly influenced by, as I mentioned, the variable factors, then it could happen that all those three instruments is going up. That means gold, USD, USD, and JPY. In that case, when dollar and JPY both become stronger, the market moves in a side with the USD JPY. Okay, so usually, if you look at if both gets stronger, USD JPY might form another red candle here or narrow doji in that area from the weekly, and it might goes in extent in a sideways movement. Okay, so there is a new session open, and with the invoice session open, Okay, going back to the news again to see what is coming up. Gold dips US dollar strike. So looking at here, gold price edged lower on Friday as the dollar formed to a near 1 month high. So we can see the market here now, it's coming to potential balancing area. So we have only 20 minutes for the advanced GDP and core PC price index, and that might, what I think is, if you look at the progressing towards the news session, we are looking at potentially further entry as soon as we see that we have 25 minutes to go. And I would like to start with a pool. You guys have seen that pool really does a lot. So looking at pool, and we will be looking at here on XAUUSD. What's your view on that? Okay, anyone, if you guys want to get the link, you can find a link below this video for the broker that I'm using, and there you can use the link, and that will also give you the bonus for the first deposit. Straight, I think that, let me see which link here. So in the description, if you go to the description, this will be the third link. All right, so third link, and you can copy paste the link or use that one here. Okay, so here is, as you can see from the lower time frame, it has formed an inverted head and shoulder, right? Now that inverted head and shoulder is breaking back to the upside. When I open the link, it seems to me the global, which is different to the UK. Okay, so there is a separate link. Probably you can, yeah, because the region wise there is a separate link. Okay. Ultimately the same thing, guys. If you when you register, it's gonna ask you more information. Ultimately you will be taken to the zone, because there is a, it's all connected to it. If you are not using a VPS, then a VPN, not VPS, come on, VPN, then it's gonna ultimately take you to where you belong to. Okay. It's very simple. Because when you register, it's gonna ask you more information, and that will ultimately take you to your zone. Thank you. Yeah, so basically if you are using, let's say, global link, even then once you register, you have to select your location, right, where you are. and when you select that location, it will automatically redirect you to where you normally will be based on your region. So it's the same thing. So you can use the same link for any region, because when you register, it's gonna ask for you to specific questions, and it's gonna take you to the right place. So it's the same, but still I can leave that link here. Let me see that here first, specifically for the region. So this might be for you to use the link. Okay, so here is slowly the market is look at that, putting the pressure back above. We are progressing towards we have only 20 minutes for the news to come up, and we want to see that now for this area how the news might be. Can we buy or sell? Okay, so we sold previously. Now we are looking at, this is a bull market now at the moment, and as the news is coming, we are looking for an entry here for an upside bias, right? The goal here is to be patient, guys. I know that trading needs a lot of patience, and we have entered. The main focus here, the time that you are spending is to use it maximal way, is to focus on how you can learn and develop the trading psychology. That's where the main focus. Remember that your trading success depends on few factors. Okay, 70% will be on your trading psychology. Very important. Now that means that you can be successful alone with trading psychology, not at all, but whole success is a part of, if you look at piece by piece, that means the importance, prioritize. Okay, so here this live session is where you can have the best opportunity to develop healthy trading psychology. And interestingly, there is no trading education, right? You won't find anything. Guys, keep in mind that you can find a school, university, college, public school, private school, everywhere. But there is no, except the social media, can you find anywhere that there will be, that you can attend a university for learning to trade? If there was such university learning to trade, you see that trading is really, really hard, very hard. And those hard things, if you look at many of the things that you can find that has a high level of training facilities to make people, right? Some of the skill set, training facilities, training ground developed to train people for such a difficult task. And when people graduate from those, came out of those, okay, so you'll see that there are such things that become very good at it. There are many training facilities available. If there is such thing as traders training facility, okay, 5 years entry, no educational background required, you will come out on the other side a very effective trader. And once you become that effective trader, you are free. Just buy a laptop, trade, and roam around the world. That's a setting free, right? But there is no such thing as that. So this is where you will be able to find that, where we are trying to build that facility for as many traders as we can that can develop the trading psychology, which is very essential. All right, so not buying yet, because it's pretty this is a very important level that we are looking at. Also, short-term sell, I wouldn't sell against the trend, because it's a trending market, right? And this is if you look at, it's still showing significantly bullish market, and I would still look for buying of this market. It's trending here. It's showing the trend. A big more pullback, another more pullback. The market is maintaining that series of higher high and higher low, which is showing that the market to maintain its uptrend here. And you could see the market is, here is the key level, and it's showing that the price to maintain its uptrending market structure. Okay, chances for the weekly going back to 5042 is higher. So the weekly liquidity zone here. So here's the support level, and this is, we have 10 minutes to go for this candle to close. This is 30 minutes price action, and looking at this candlestick pattern, eventually I think there is a higher chance for this market to rise back up here. So this is maintaining that trend, and there was a breakup structure of this key level, and it's again moving back in the direction of the trend. There is a higher chance that we could see that weak fill again here. So double doji on the 15 minutes showing bullish. See that if we can find the next entry in that market. I'm going to the 1 minute chart again to see that where it is heading. Here's the coming, the market is here dropping to that key support area. We're looking at this market to eventually break back to the upside here. And if we look at the price action here, we are looking to see the price to, so we might see the market is approaching that support here, and if the price cross that low further, we will be looking at that movement back to the upside. I'm very mindful of the spread, as large spread means the price had to move more in your favor before you make a profit. Okay, so in terms of spread, like it's almost most of the, I have seen that there are standard account and then ECN or the row spread. Okay, it's very like universal most of the time, depending on if you are using a standard account, then there is no commission, no problem. And most of the broker that I have seen, that most of them are universal, right? Depending on what kind of account you are using, and you can communicate with broker if you because I am trading for a very long time and I know all of that how it works. So if you guys having, let's say you are trading a bigger account, you can talk to the broker support to give you a custom spread account. Okay, you can request for that depending on what kind of like account size you have. But usually for standard accounts it's a bit higher because you don't pay commission. For ECN broker, then you have to pay a commission. So depending on what kind of, and I would more of think rather than the spread than other convenience. Okay, for example, the broker that I'm using have commission, right? It's a trade credit and it's adding to my balance, so I would prefer that one because it's giving me some additional trade credit, depending on, you know, as this is a free choice that you need to look at what is best for you in terms of entry. But usually that what I have seen, it's very universal. However, the system that I am using, okay, because here we are trading, guys, here, and also I have my system automated, and every program that I have written, every strategy that I have used, I also use the spread in my profit target. So it's the advantage of automated system. So how it works, this is my stop loss, this is my profit target, and I have added a spread in my profit target. So whenever the market is going up, and it's also need to go to past that spread point to take the profit. Sometimes it gives me more profit than the other way around. It depends on also the account size. So this is where, especially looking at, you know, to factor all of that, then you can get the right account size and everything. Okay, now reliability is more important, of course. Peace of mind, where you are at, many factors that you can consider. Okay, now we are looking at, again, guys, going back to the chart here. On XAUUSD, the market is in trend, and we can see that it's in the trend, moving back to the upside. Here, the price has left significant imbalance if you look at in that area, right? Now, because the market has left that imbalance, it's now slowly building that momentum back to the upside. Right, so you can look at that, and if the price done enough pullback, we will be looking for that entry. I've heard good things about Vantage, and I think they are. Yeah, of course. Yeah, you guys can say that. Let me tell you something. I'm trading for very long, many years. Okay. In a sense, I have never seen that any broker has, you know, taken the traders' capital. All brokers work well. The only thing is that because it's their job is to serve the customer. So here, the thing is that depending on where you are and what's your capital, make sure that you do enough research before you, because everything is available. You can do research and you can find out who is good for you. But usually highly rated brokers that you can, most of them, okay, are highly rated. That I'm using, the broker that I'm using, they are, because I trust them for a long time, so I also recommend to the people who are trading with me. So you can see they're trusted and also have a high trust score in terms of all the things that is available. Okay, now here if you look at, this is a support level, And the market is now trending back to the upside. 1 minute, absolutely, thank you very much. Okay, so let's look at here. Now this is a support that you can see the market. This is the 30 minutes price action. There is a higher chance for the market to bounce back to the upside here, and with this series of higher low, it's maintaining now that uptrend. Okay, here is the series of higher low. The market is maintaining that uptrend, and with a break of structure, all right. So if you look at that, the market is breaking from the structure. This is what we are looking at for this entry, and this is a trend line. We see there is a break of structure, and we want to enter off that key level, and so there is a liquidity sweep. And the data has come out. If you look at here, so there is a 1.4% on advanced GDP, which was forecast 2.8%, and core PC price index is 0.4% instead of forecast 0.3% now. So let's see that how does that has had a reaction on DXY. That if you look at with this bearish engulfer, the market has, as we discussed, there's a double top, and the price may come down back below here. And so because there is some data has come out here, we are looking at the market to show up to see, and I think this is now giving some kind of momentum on gold to see if this market is getting here bullish. Okay, so let's see that there's a break below. If you look at, this is a break, and that break might bring that new trading opportunity here. Let's see that where it is going at the moment. Until now, look, there is a break, right? And now this breakdown that you can see, we want to see that the market has reverse of that breakdown. The head and shoulder, and the market might be coming down here. And all right, so here there's a break against the trend. Because the market has broken against the trend, we are looking at this market to retest and then to reverse back again. So this breakdown that you can see is against the trend, and DXY after break below pushing back to the upside. We'll see that which way the market is eventually be heading. This is what we are looking at here. Now entirely there is a break of structure. Now for us to be able to enter this market, right, and if you look at here, it's breaking, it has broken that low. We might see that this market to eventually bounce back to the upside, or we could see entirely drop down. Breakout structure here of this support. Now after this break below, the market might slowly build that momentum back above here, and this is what I'm looking at the moment for the price to show up. And it tested that low, still hit this. If we can find another entry, this might be a liquidity sweep. There is a higher chance. Okay, so the 30 minutes candlestick pattern is here. I'm looking to see if there is any possibility for us to go for an entry. Coming to 30 minutes 20 EMA can be a good area that we can look for buying again. And your comment is very impressive. Congratulations on your successful channel. Thank you very much. Yeah, absolutely. Now guys, the success depends on it's my goal here is to help the traders so they can become successful. If the traders become successful, then the channel is successful. This is where the focus is, and this is what we have developed quite a few tools that's helping traders every single day, including this one that we have. This is one of my best creation. We have some outstanding trading tools as well as strategies available in the academy, and all of them are original. If you look at those strategy, the trading robots that traders are trading, fully automated, they are entirely generated from our academy. Okay, and this is the basis of our the strategy of completely original. And that is what I think, that's why the traders are drawn to us and we drawn to traders, is because of this. And it's 2026, it's now it's a time for something really advanced and where we are at. If you look at this trading view, this is a trade entry engine, and we have opened our first trade today using this tool and successfully closed, especially if you are using that, because it directly generates the trade alert with entry, stop loss and take profit. If you are using manually on trading view, then probably a higher time frame is better. But if you are using the automated version, I can trade even on 1 minute and 5 minute chart, because in an automated version we can close the trade within a very short period of time, which is manually very difficult to do the risk management, right? Looking at the chart, looking at the price action. But in an automated system, it's fully built in and it does. But I entirely, like, I'm a primary school teacher, right? Like that. So I teach on primary trading, looking at the trend, trading every single day, but I have university level tool. So the entry for you here in the primary, right? Without learning that, I wouldn't even not giving you any tool to trade. So this is how it is. I'm a primary school teacher, but I facilitate the university level tool that the trader can use to take their trading to 50 years advance, 20 years advance yourself. Okay, back to the future. Where we are looking at now, the market here, if you look at in this area, so trend is where I mostly look at. Okay. Really good to have a visual presentation on YouTube. Many signals providers are anonymous. Yeah, I know that. Almost all of them. My here main focus, in trading here is that, I focus on learning and education. Signal is, I don't say myself a signal. It's just, in fact, a learning process, right? Let's say the ultimate goal is to become a trader. So if you are, let's say, ultimate goal become a driver, but you never even, if you go to a driving academy, they give you, let's say, a computer-based training, all right, visual, what I call the visual tour of how to drive, but never take you to the drive in the road. You will never be a driver because driving is hard, right? In the beginning, trading is like that. If you are not trading in live market, then how am I teaching you trading? So it's a part of learning process that I encourage you to open in a demo account in the beginning, those trades that we can see, and then learn it properly, learn the risk management, and then go to the live. If you think that you have some risk aversion, or this is very, in the beginning it's emotionally very hard, but it's a part. Once you become good at it, you can easily handle that emotion, and it becomes easier and easier. Being a trader is rewarding once you understand all of it. Okay, so here we are looking at now 15 minutes candle closing, and can we find an entry? Yes, you are. I try to give whatever I have. Now, it's a mirror, right? Good educator and good students, they usually mirror. Okay. And also I am a student at the same time. I think which said that the world is a stage where everyone is a student. Reversal. Now we see that the market slowly is building that momentum back to the upside. can practice that at home as well. It's called the positive reinforcement, right? Because in any aspect, the brain wired in that way. Okay, so if you look at the neuro connection in the brain, the way we interact in any aspect, it's create a neuro connection that will keep repeating in every aspect. So it's a practice that I think is helpful, especially for traders, right? Because trading is highly intense, and when you have a positive reinforcement, that will help you to handle the emotion coming in trading. Okay, now here is what we are looking at. Reinforcement there. So if you look at the beam, we have looked at the beam or column in a building. So if you look at a beam like the house or the building that you have, there is a beam. Okay, so the beam, you'll see that they have steel at the bottom, the majority of the steel at the bottom. It's called the reinforcement. So the reinforcement is used to overcome the bending moment, because with the load coming from the top, the concrete is not good at taking the stress, but it still is very good at taking the stress, which is the reinforcement. The steel help to take the tension coming from the top, so it's called the reinforcement. So when you have that reinforcement, you can take more stress that coming from the trading. Okay, now from this support level here, the market slowly building that momentum. I'm looking at potential entry. We had entered in the beginning. Now the data has come out, and we might see the price to eventually break that here. So with this support layer, you can see the market of this level created that bullish pin bar. It's almost to the 4-hour resistance line, and of this 4-hour resistance line, the market has dropped down back below. So we're looking to see. I'm really hesitant to enter buy yet is because of the long wick it left here. At any point it might come down to fill that, but we might see that approaching that key level shortly after. Breaking entirely back to the upside here. It was very fast move here, guys. It's entirely broken above that level. It's a clean bullish move. Okay, so this is 30 minutes candlestick pattern, entirely broken above. Now, as we are on the weekend, Friday, right? Which is party day as well, big day, and there is significant imbalance here in that market. So we had our first trade in the beginning of this session and looking for more entry coming later. The market has in a very, very high volatility. So for those who haven't entered the trade, we open in the first, I think, 10-15 minutes one trade. If you join later, probably miss the trade. What I would suggest is even you can go back to the live session and review the trade for learning purpose. I more often wait for the best setup possible, and that's why we've taken the first trade here. And now it's in a very strong trend, and in such a strong trend, the best way is to wait for a complete break of structure. After the establishment of the trend, then we will be looking at entry. As of Friday, we have another trading session here. Okay, so yeah, I'm dropping it lower. Thank you. Thanks for the feedback, guys. Anything that you can mention here. So it's Friday, and tomorrow we'll be conducting a Zoom lesson in the academy. If you are in the academy, so make sure that you join the Zoom classes. And coming up next week, also every single day I'm coming on live along with many other analysis that I'm posting. So if you haven't joined the Telegram, you can also find link below this video, and also I'm sharing the chat where you can also stay connected by joining the Telegram. While also you can visit the website for the academy to see how it works. That being said, thanks for joining here, and I'll see you again very soon, shortly after trading in another session, just after this short weekend break. I hope that you enjoyed, you learned, and we'll see you there again very soon trading. Until then.